Hello, welcome to Accounting YouTube channel. Please do not forget to subscribe. Today we'll be covering schedules and that support your statement of financial position. Now, most times during month end, we are required to prepare schedules to back balances that will support balances in our balance sheet or statement of financial position. Now, today we're going to walk you through not preparing them, but just listing those relevant schedules that support certain balances in the balance sheet. Now, we're going to start with PPE. For PPE, schedules that can give you comfort about exactly what is there. You have your fixed asset register, which some people call FAR, that shows you a list of all assets, right? Their cost, date of acquisition, depreciation, accumulated depreciation, and net book value. Another schedule that is required to prepare for PPE is your movement schedule. For your movement schedule, what you basically have the various classes. So let's say plant and machinery, motor vehicle, furnitures and fitting, maybe land and building. Then you would have what you call an opening balance. You have an addition. You have your disposal. You could have write-off. And you have a closing balance. And this you have for cost category. And you also have something similar for accumulated depreciation. The only difference here would now be that for accumulated depreciation, instead of addition, you have like charge for the year, which is basically your depreciation for the year. Now, for some businesses, you may be required to list all additions in the period you are looking at, right? So those are like three basic schedules that could give you comfort over your property, plant, and equipment. Now, for cash and bank, key here is bank reconciliation. Bank reconciliation and cash count. Right? Meaning that all accounts that the business owns should be reconciled. That is, a comparison between the GL balance and the balance per bank statement, and explain why there are differences, or highlight the differences, what has caused the difference between the two of them. Your trade and other receivable. Now, for your trade debtor, your aging analysis is something you should have. If there's prepayment in your other receivable, you have your prepayment schedule, right? And some other receivable, you have staff debtors. You can have a list of staff that owe the business money. Inventory, you can have your stock count and also have a detailed list of all inventory items. So that means if, for example, someone is selling like jewelries, you should have all the list of jewelries. Or someone is selling furniture and fitting, you should have all the furnitures you have available, their quantity and their price. Right? And that's all for that. Your trade and other payable. Here, for your trade creditors, you can have a list of all creditors, right, and how much they owe you. Now, depending on nature of business, you can have reconciliations with them, to confirm that the values your vendors say they owe you is what you are carrying in your books, right? Another thing you could have is a movement schedule. For your provisions, and you could actually have what you call a detailed list. for your accrual. What am I saying? For movement schedule, what I mean is showing you have an opening balance, right? You have your charge, that is additional provisions you may have booked in the period. Now you could have utilization, that means instances where you've utilized that provision in the period. And you could have reversal, that means a provision you no longer require and you have a closing balance. So for example, a good example is, let's say, audit fee, right? Or bonus. You provided 3 million, 1 2 3 1 2 3. You've made additional provision of, let's say, 1.5 million in the period. You've now paid some of your employees that you owed, that you book provision for bonus for from last year. Let's say you paid 2.3 million. Indirectly, you can say that you don't need 700,000, which is prior year's provision of from your 3 million. Negative 700,000. You have a closing balance. Okay. Yeah. So that's the case there. Now, detailed list is that you have a list. So for example, you have an accrual for, let's say, audit fee 500,000, maybe tax consultancy, let's say that one is 200,000, and let's say maybe a vendor that supplied you something that you've not gotten the invoice, but you know the cost, let's say 150,000. You have a list. So this is like a detailed list, because the major thing is that whatever you have as the total here should finally agree to whatever you have in that GL. So you have a detailed list of what makes up the total accrual you have. For income tax, key is like a movement schedule too. But unlike in this scenario where you had opening, charge for the year, utilization, you have maybe charge for the year, which is your income tax expense for the year. Possibly utilization is maybe payment where you've paid. Then you also have reversals when you don't need provisions anymore. The order of how you booked it could be in this structure. That's opening, charge, payment, reversal, and your closing, and could also be downward, that's vertically. Now, share capital, basically your CAC documents, right, and how they paid for the shares issued to them can give you comfort over this. Your retained earnings is basically similar to movement schedule. You have an opening balance and you have the profits for the year. Your opening balance can be agreed to prior year and you have your closing balance. Okay, we've talked about income tax. Deferred tax, basically, depending on the nature of the business, what you can have with deferred tax is that you can maybe have it invoice specific, where you have a list of all invoices for which you receive money for, and you've not maybe earned that revenue, right? So you can have a list of all the invoices and how much you've earned. So invoice 1, invoice 2, invoice 3, and how much, 500,000, 300,000, as the case may be, right? And that's it all for this particular financials. I hope you've been to learn something. We look forward to hearing from you. Do not forget to subscribe and share with your friends.